presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app works great, and getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling and prowling with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. Let's take a look before we get into everything. Of course, NVIDIA smashed earnings. There's fantastic microsystems as well. Li Auto is getting hit with a U.S. class action lawsuit. We're going to go over all of this. Let's take a look at what we got going on right now. Well, the E-mini is off about 0.99%. The Russell future is off about 2%. NQ is down slightly as well at 0.83% to the downside. And then the Dow futures at 1.62%. Now, gold is having a little bit of a pullback day as well. We're down about 2.37%. Same with silver and copper as well. Now, copper really got hit quite a bit yesterday. We were trading at a high of about almost 520, trading right now at 477. Now, it's probably just a momentary pullback after making some pretty strong highs, but it remains to be seen what will happen. Crude oil itself is coming down as well, which is certainly interesting considering that we're getting into the summer months. Of course, as I've said multiple times, and a lot of news outlets have reported as well, we have a lot of crude oil. However, it is still interesting to see this come down a little bit too. Be interesting to see if we can hit that 70 range as well. Tesla at 173.92, trading off about 3.4%. There are new job openings for Tesla, which is regarding AI and really autopilot, which is particularly strange since they got rid of a lot of the workforce. Or a good size of the workforce, rather. And then the dollar is back up into that 105 trading range, but just slightly. Let's talk a little bit about NVIDIA. They're doing a 10-to-1 reverse, which is cool. And let's see what we're at right now. Did we crack 1,000? Yes, we did. And we are above 1,000 as well, up 8.38%. Now, this is honestly some pretty crazy numbers. So let's talk a little bit about it. NVIDIA's first quarter results released on the after the bell yesterday showed adjusted earnings per share about $6.12 on revenue of $26 billion. Again, we were talking yesterday. I think a lot of the analysts were looking at a $5.18. And others were looking at $5.65 EPS on roughly the same amount of revenue, although a little bit higher. Pretty impressive. This is a jump of 461% and 262% respectively from a year ago. The company also announced a 10-for-1 stock split and an increase. Did I say reverse split? It's just a stock split. And an increased dividend following some of its big tech peers in doling out heftier quarterly payments to shareholders. Analysts were expecting adjusted EPS of $5.65 on revenue of $24.6 billion. As according to data from Bloomberg, the company reported adjusted EPS of $1.09 on revenue of $7.19 billion in the same quarter last year. Unbelievable. In this current quarter, NVIDIA expects revenue of $28 billion plus or minus 2%. So this is from Jensen Huang. Okay, he said our data center growth was fueled by strong and accelerating demand for generative AI training and inference on the Hopper platform. Beyond cloud service providers, generative AI has expanded to consumer internet companies and enterprise, sovereign AI, automotive, and healthcare customers, creating multiple multi-billion-dollar vertical markets for sure. And then we have news as well that Microsoft is going to put essentially ChatGPT onto the computer. And it'll be able to do things natively on that computer. So it doesn't need to communicate with the cloud and for everything. Definitely for a lot of what we know from generative AI, we'll need to connect to the internet. But this idea, they haven't maybe explained it as much, but the way that I kind of see this is, if you click, the Windows key right now, You can type in things. There's troubleshooting you can do on this computer. Say you need to find something or clear out file system or look into some directory. You can just tell the AI what to do. And this is something I've been saying that we've been moving towards, this idea of increasing graphical user interface, okay? And this is that concept in its purest form, right? In the beginning of computers, you had to punch stuff into a terminal, okay? Or even before that, you actually really had to like code, right? Even throw in some binary early on. And then you got the command prompt, and then you had graphical user interfaces where I can click here and, click that little file system and go in and so on. But there are still parts of the computer that I would say the ways of approaching it and kind of analyzing what's going on in your computer are a bit arcane. And so something like GPT-5, which will be put onto these machines, will completely eliminate any need to, I think, really understand the technical of how to work on your computer and how to get the most out of it. This is super interesting. I can't wait to see what kind of happens with that. I mean, this is, again, pushing the idea of making technology easier to enter into. It's pushing it to its far logical conclusion, which is pretty neat. So Wall Street analysts have previously raised concerns about the share of NVIDIA's data center revenue that comes from hyperscalers like Microsoft, Google, and Amazon, and other big tech names. That's especially true as those companies roll out their own AI accelerator chips. Wong pushed back against concerns that the company could face demand lull as it shifts between its current and next generation of AI chips. And this is super interesting because I was talking about this might be a legitimate problem for them. He said people want to deploy these data centers right now. It's like they want to put our graphic processing, the GPUs, to work right now and start making money and start saving money. And so that demand is just so strong. NVIDIA's data center revenue jumped 427% year over year to $22.6 billion. That's accounting for 86% of the company's total revenue for the quarter. The gaming segment, which again, this is kind of what NVIDIA really started off as, which was previously its most important business, saw a revenue of $2.6 billion. Wow. I mean, really talk about like knockout numbers for NVIDIA. Very interesting. And so right now we're trading at 1,023. Then I believe we had, if I can get this to load, we also had Microsystems pop up pretty significantly today as well. Excuse me, Super Micro. Let me pull this up here. So that's actually down right now, but we're trading at 838. So earlier, it soared as much as 11.3% on Thursday morning. This was a good earnings report. Super Micro investors saw NVIDIA's success story as a good sign. Then, obviously, we're trading down right now at 4%, roughly, at down 3.87. It faded later in the day, just probably because people want to get a sell-off if they've been, if you buy at this point, you get hit on this downdraft, you get this nice pop-up. It's probably just some selling in this. Again, Super Micro is still, let's be real, all these big kind of names are here to stay for the short term at least. Definitely for the long term, I would argue as well, but definitely the short term. Folks, stay tuned. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, It has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. We're talking about Super Micro before the last break. One of the interesting things I want to bring up about them, which I find cool, and especially, well, I really do find it cool, right? But the point is I think these guys are here to stay, and they are implementing this liquid cooling for data centers in a way that others aren't quite yet. So this is just the article for it. You know, this, of course, is being given to them by Supermicro as well, but it is interesting to look into, you know, the whole science. There is a whole science behind cooling these big servers. You know, in the past, you had these big heat sinks, which were, you know, those kind of strange variegated hunks of metal in server racks and everything. And, you know, what's really unique about blowing liquid cooling to something like these massive data centers is that in a lot of ways, you know, especially how NVIDIA got started, is it kind of gets pioneered by gamers, right? So I remember one of the cool things, maybe a decade ago or something like that, what it was is that these people could buy these computers and they would suspend all the components inside some kind of liquid, or they would run tubes of this liquid near, you know, the CPU and whatever, and this kind of stuff would suck the heat out, and it just made the computer, you know, run better, essentially. So take a look here. This is the data that Supermicro is giving, but it says data center servers that are liquid cooled can work to significantly lower the overall power consumption of a facility by up to 40%, according to the company. Complete data center liquid cooling solutions can also work to enable AI factories to be built faster using the latest high-performing GPU servers. For sure, Supermicro's complete liquid cooling solutions can handle 100 kilowatts per data center rack. It's insane. But yeah, if you ever have time, you know, we have a long weekend, so we want to look something up. The theories behind cooling these centers is actually really kind of neat, and you wouldn't expect it. I kind of liken that to, I was, you know, upstairs in the office the other day, and I saw smoke coming out across the street, and I was like, what is that? And I went down there, and there was some utility truck on fire, and so I was saying, the point is I was watching the firefighters put this out, right? And they were doing things that, you know, logically make sense, but you wouldn't think of, right? So the whole area got doused. It wasn't just the truck, but the whole area, pretty large radius, completely doused. They came and they tore up all the grass and they tore up all the plants. And it's just kind of interesting to get insight into that, right? And I would say, you know, it's the same thing with learning how they cool these systems, because there's some stuff that makes, it's logical sense, but you never think about it. So anyways, I find that cool, and I think Supermicro is still pretty dominant. Now, let's deviate a little bit, and let's go over to Google, and let's type in ord-oracle.com. Now, the Ord Oracle is authored by Tim Ord. Tim Ord, I mean, years of experience, right? Longer than I've been alive in analyzing these stocks. He is a master technician. He comes on the Tom O'Brien Show every Tuesday and Thursday, and we are pleased to have him again. Tim, how are you doing?
Good. Thanks for having me on again. Anyhow, everything. Let's take a look at markets.
Absolutely.
Jump right there if you want to.
Yeah, interesting day we have right now. I have the SPX chart up, chart 1.
Yeah, chart 1. Okay, it's always kind of look at the bigger picture and then work backwards, to the short-term picture. But this chart goes back to 2003, and the bottom window is a weekly SPX ratio, and the one above that is just the weekly SPX. And so I just wanted to point out that I do a lot of work with the VIX, and anyhow, bearish signs occur when the SPX makes higher highs and the SPX VIX ratio makes lower highs. And I pointed out all those times going back to 2003 when that has happened, and all of them came at significant highs. And if you look over to the right window, it shows you where we are right now, where the S&Ps, this is a weekly chart, so it's not a daily chart, but we did break above some the previous highs of March, April there, and the ratio also broke to new highs. So what that says on the bigger time frames, we're not saying every day is going to be an up day or even every week's up day, but the bigger trend remains bullish. So we're long at the moment. We're staying long. We'll stay long until this ratio, or the SPX makes higher highs, and this ratio makes lower highs. So, and we don't have that yet. And this is a weekly time frame, so it's not like a daily. So to me, this draws a bullish picture, probably out for the next several months. Maybe rest of the year, I don't know. But it's an all clear sign for at least a multi-month period. And so not seeing any danger here on a intermediate term time scale. So let's flip to the short term here, what may happen.
Absolutely.
I'll get to chart 2 here.
Yep.
And go ahead.
Oh, no, I'm just saying we got it up.
Okay, good. Anyhow, chart 2, the top window is a daily SPX. A little bit messy in here. I got probably too much information. But I want to point out this last rally up had 10 days in a row up. I really don't have statistics that show 10 days up in a row is really rare. Normally, 7 days up in a row predict the market will be higher 83% of the time. 8 days up in a row predict 93% of the time the market will be higher within 5 days. I really don't have any information on 10 days, but it's not bearish. And so even though the market's kind of consolidating here, you get that much momentum up. It's never the final highs. So I did expect at some point we may pull back to the gap area. Last Wednesday, I think it was, we gapped above the late March, early April highs. We left the gap open there. So there's two things going on here. A lot of times you break above previous high. Normally you test the previous high at some point. You also gaps. Once you get a gap, a lot of times you come back down, test that gap. So we got two things going on here. You got to break above a previous high. Normally you get a pullback to test that high. And you also, that gap is also probably a good place to know that you're probably going to test that gap. And I've been telling my subscribers over the last week, there's a good chance that gap could be tested this week. And if you know, today, I do actually watch the full moon, and the full moon's today.
Yes.
And it says normally full moons create some volatility in the market, and sure enough, it kind of did today because we gapped up, hit a new high, and now we're kind of closing down, and we're awful close. Yeah, we're inside the gap right now as we're talking, and probably that gap's going to hold as support area, and probably could set up the next buy or buy. So I'm actually still long from I forget, sometime in April, mid-April. I got long. I'm staying long because the intermediate term trend is still up. But on a short-term basis here, I guess if you wanted to add to a position, the ideal place would be the previous highs and where that gap lies. So in a nutshell, probably 522 on the SPS is probably a good idea. There's a couple of different ways you can check if that area is going to hold. Actually, we're into about a break area, aren't we?
Yes, close. We are. If you stay right there, Tim, we can get right back and get back into it.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tiger's Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back. back, everyone. This is Jacob Shoup filling in for Tom O'Brien. We are joined right now by Tim Ord of the Ord Oracle. Tim, we were looking at chart 2 before we went to the break. We're looking at this 10 days upwards in a row, and you're still saying that we're seeing some bullish sentiment overall. Is that correct?
Right. So right now, last Wednesday's gap above the previous high, if you can see that little blue line I draw there, and I draw on the volume part, the blue circle.
Yep.
Okay, that area, round off numbers, is basically 60 million shares. So that gap occurred on 60 million shares. So right now we got about 35 million, give or take. We got 25 minutes to go before the market closes. So if you test the gap area, which is 60 million shares on 10% lighter volume, so that would be about 54 million shares or less, that gap has support. So I don't know how to explain it, but anyhow, put it this way: if we we're hitting the gap right now.
Right.
If volume is less than 54 million shares, that gap's going to hold a support because it doesn't have enough energy to push through that gap. Just like a test of a previous high, you test a previous high on 10% lighter volume, it doesn't have the energy to push through that high. Gaps are kind of like highs, but it's not a high. But anyhow, it's a left open space there. So if we close today, say 54 million shares or less, that gap's going to be support, and it's going to be an area where the market's probably going to reverse. Okay. And also, we're going into a 3-day weekend here. So today's volume, I don't know, it's going to be, it's probably going to be a little bit higher than yesterday. But as long as it's less than 54 million shares, you'll be fine. That'd be an area of support. And tomorrow, the day before a 3-day weekend, volume's probably going to be really light tomorrow. So even though the market may not do much tomorrow, it could set in that gap. As long as that volume's light, probably, next week we'll start to rally. So as we said on chart 1, the bigger trend's up. Chart 2 looks like that gap and also the previous high around that 552 area is probably going to hold as support, and we may start seeing the uptrend start again probably next week. So this is probably just a sideways consolidation, build a little energy, building cause, I guess you might say, in the Weiskopf method, and probably start marching higher, in my opinion, probably start sometime next week. So,
and so if we test this gap on, 90% of this 60 million, as you're saying, the 54 million, and we go lower, does that then turn us into a bearish environment, or is it kind of just, I guess, a lower consolidation?
So you're saying if you go through the gap
with that required volume
on 10%, 9% less volume, or
10% less
volume? Yeah, sometimes those gaps are always, sometimes it depends on the market, but sometimes you close below that gap a little bit and actually stays below it. But long as volume remains light, at least 10% lighter than when the gap occurs, that trade's still good. Volume's the whole key. For some reason, you go through that gap, and today we had, say, 50 million shares, and you're below the gap, you're fine. But for some reason, volume picks up tomorrow to 60 million shares, and you're still below that gap. That would be a bearish sign. So it's all about volume.
Awesome.
So long as volume doesn't pick up, it doesn't have enough energy to push through that gap, and it should reverse. So,
love it.
But yeah, it can close the gap and actually even go a little bit lower. Here, volume's more important than price.
Definitely.
So
awesome. Yeah. Thanks for answering that.
Okay. You want to go? You want to take a look at the gold market?
I would love to take a look at the gold market. The metals in general are, we just had this massive run up, and silver, gold's down, silver's definitely down, and so is copper. And I'm interested to hear your take on gold right now after this kind of pretty historic run up we had.
Yeah. Well, let's look at the bigger time frames.
Sure.
This next one is a cycle, the 4-year cycle, and there is a 4-year cycle on gold. There's also an 8-year cycle and a 16-year cycle. And this chart goes back to 2005. And the blue circle, semicircle there, is a 16-year cycle. The red semicircle is an 8-year cycle. and the 8-year cycle bottom in actually September of 2023. So about better than 6 months ago. And we actually talked about that. Tom and I were on talking about when I think we had this chart coming up, and there's a lot of indications that last October, it depends how you do the analysis, but September, October of last year was a very important time frame for gold. And this cycle analysis says, time-wise on the 8-year cycle, the October 2023 is an important time frame, which turned out to be exactly right. So you add 4 years to September, October of 2023, you come up with September, October 2027 as probably the next intermediate term high. So I think in cycle-wise, we're very early in the stages of a bull market they may last another 4 years. This is the gold analysis, not equity analysis or the gold stock analysis. It's just gold in period. So the next 4 years is probably in general going to be up. So we broke out of a time frame. How high is up? You can come up with all sorts of numbers, but evidently inflation is going to stick around. That's what this gold market analysis says as far as stock analysis. But September, October 2027 could be an important time frame. So let's look at smaller time frames, or let's look at the equity markets or the gold markets now.
Yes. So I got a chart 4 with HUI.
Yeah, HY. We kept looking at the XAU gold ratio, and we looked at GDX, and let's take a look at HUI. The bottom window is gold. It's a weekly chart. Next window up is a weekly HUI gold ratio, and I drew a trend line going back to the highs of 2006 and drew that down. And that trend line is also kind of similar to what it looks like on the XAU gold ratio. They're up against that trend line right now. And what I want to point out on the HAU, the weekly HUI gold ratio, actually it tested the last low of 2016. It hit right on it, stopped, and it's actually kind of turning up. Now we're attacking that trend line. Look, I hear the music.
That is indeed the music. Tim, stay right there, and can't wait to go through the rest of these charts. Folks, we'll be right back with Tim Ord of the Ord Oracle.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show, and we are joined with Tim Ord of the Ord Oracle. Now, Tim, we were talking about gold before we went to the break. However, we're actually getting some love in the YouTube comment sections right now, and someone was bringing up, one of our viewers, about your not recommendation, but your analysis on, oh boy, what was the silver? Discovery Silver, I believe. And we spoke about it, I think, last week, and she was curious if you had anywhere that you look more into specific equities, or if you had anything along those lines. I was just curious as well.
Actually, I didn't do a study. If I knew that answer or questions come, I'd have presented some gold and silver stocks. Probably, if you're talking about the equity gold market, silver stocks should outperform gold because that's what happens. Silver outperforms gold in bull markets. So silver should outperform gold stocks going forward, probably all the way into the next 4 years. But I don't have a list. I forgot what... I own so many gold and silver stocks. I forget which ones I showed last time around. But I looked at the monthly charts, and I presented those two. I think I had two charts of gold or silver. I don't remember which one it was now. But what I had was I had the Bollinger Band on a monthly time frame on those two stocks. When those monthly stocks close up on the monthly time frame on the mid-Bollinger Band, that's usually a long-term buy signal. Because momentum rules all indicators. If a momentum's up, I don't care if it's overbought or whatever, it's going to keep going. And so momentum is kind of the centerpiece of my technical analysis. That's the reason why I look, 10 days up in a row. That's a lot of momentum. You're not going to kill that momentum on a sideways consolidation or some sort of a minor top, because the market with that momentum is going to push higher. So I look at a momentum monthly Bollinger Band on those gold stocks. When they're above a mid Bollinger Band on the monthly time frame, especially when the Bollinger Band's really squeezed together, which a lot of this was happening right now on a massive scale on the gold market. Matter of fact, let's take a look at chart, because I can show you that on chart 6.
Yeah, let me pull it up for you. And yes, the viewer was saying it was Discovery Silver you were talking about, and I guess it popped 30%. So.
Okay, well, good. I hope you benefited.
Yeah. Okay, I have chart 6 up right now. We were on chart 4, but now on chart 6.
Right. Chart 6, the second window down from the top is a bullish percent index for the gold miners index. I don't actually know how many stocks are in this index. It's kind of like the Dow Jones or something like that. It's an it's a gold miners index. It's like GDX, but anyhow, you got 80% of the stocks, or no, it's 80. About 82% of the stocks in this index are on buy signals, and that's where you really want the sweet spot to be, above 60 and actually preferably below 90 or 95. if you get up around 95% of the market going up, that's usually times that you're probably going into a top. So you want this bullish percent index to stay in between 60 to 90%. And we're right smack pretty close right in the middle of it. So this rally that's going on right now has got legs. I think ultimately, if we look back a year from now, it looks similar probably what it did back in like 2010. It kind of just stayed up in that area, between 60 to 90, whatever, 60 to 80. I think that's probably what's going to happen here. We're going to stay in this range, and before we get in the range, back off, go back up. But I'm thinking this time is kind of different. This time is similar. What I'm thinking is a 2000 bottom of the gold and equity market, where things just remain bullish for a very long time. Because what we're seeing right now is what similar things I've seen back in 2000. And that bull market ran all the way into 2011. I don't know. I don't think the gold market will last that long, but I do think it'll last at least 3 years, maybe 4 or 5. Mm-hmm. So I think this is a place to be. It's an unusual place. The gold market has kind of been hated over the last several years, and that's usually a good sign.
Yeah.
So because everybody's out of it.
That's right.
And all these, and if you look at a lot of these gold stocks, I mean, they're penny stocks.
Yeah.
And they got a lot of them got great fundamentals.
Well, even let's take a look even at Harmony, right? Which was, this is, if I can even put this on the yearly. We were trading down November of last year at like 430. We're up at 917. The high of 1024. And it exploded. And when you're at these kind of low levels in a lot of these gold, and as you're saying, it's been for so long, and then you finally get a time period where it ramps up to kind of this new level, you can make off like a bandit with a lot of these things,
Yeah, you can make a bandit. Let's take a look at chart 5. This kind of gives you a bigger view of what's kind of going on in the market right now.
Totally.
And, all right. You get there yet?
Yep, we're up right now.
All right. This is HUY again. We kind of looked at XAU and GDX, a lot of different time frames. This is the HUY monthly chart, and I drew the HUY, which is basically the second window up from the bottom, is the head and shoulders bottom. We actually had a breakout here on the head and shoulders bottom. Well, that neckline is also a trend line that goes all the way back to 2011 top, and we closed above that. So you get a trend line that breaks a, what's that, 10 year, 12 years, 12-year trend line. You're doing something significant in the market. Now, the next window above that is the monthly HEU gold ratio. It hasn't broke above yet, but the HUY has. So sometimes one leads the other. But as long as one of them breaks out, at some point the other one's going to break out. And the monthly HUY gold ratio, again, that one goes back to probably to about 2011 also, or actually I say 2009. It should be 2011 there. But that's ready to break out. When it's going to break out, it's my opinion, it's going to break out this year. And this chart, the HUY gold ratio, if you look at it, previous volatility and comparing what it's been doing since 2015, that ratio is extremely low volatility compared to what it's done in the past. We really haven't moved much over the last, 8-9 years. It pretty much stayed between 2,000 or 0.1 to 0.15 or 0.17 maybe, and very low volatility. Well, low volatility leads to high volatility, just like high volatility leads to low volatility. So you're probably going to see a big spike in this ratio, just like it did in the past from 2004 to 2014. It went up, went down, went all over the place. So there's some big volatility right in front of us. And so I'm thinking a lot of these gold stocks, for whatever reasons, is going to see some magnificent moves, I think. Just
love to hear that.
The history of this thing.
Well, Tim, we have a short break after this. I know we went over chart 6 a little bit. I don't know if you had anything else you wanted to add into it. If you do, stay with us till the next break.
All right, I will.
Folks, we'll be right back with Tim Ord of the Ord Oracle.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. We have a short segment, but we are still with Tim Ord of the Ord Oracle. Now, Tim, we had another question in our YouTube chat for you. This says, if there's any time, please ask Tim Ord what might cause these charts to be thwarted or reversed. Of course, we were talking a little bit with the SPX chart. If it breaks that gap on significant volume, that could be bearish. Regarding gold, is there anything that you could see, or what would you look for to tell if, gold is actually not in a bullish situation, but we're actually going back down or kind of stabilizing at this area?
For gold, well, let's look at gold. Let's take chart 7 real quick.
Okay.
And this looks at the equity market, but GDX, this is a short-term view. All it is the bottom window is the 18-day average up-down volume advanced decline, or 18-day average up-down volume. As long as that stays above zero, the uptrend right now is still intact, and all the green areas show the times when it's above zero. So the short term, we're doing fine. Trouble occurs when this bottom indicator closes below zero. So even though we're backing off a little bit today, we're not near, we're not even close to zero. So this is probably a mild consolidation. We're going to go higher. As far as the gold market, peaking out, basically in a nutshell, if you want to keep things simple, just put a monthly Bollinger Band on any indicator or any index you want. And when that monthly Bollinger Band turns down and you close below the mid-Bollinger Band, that's usually when you get intermediate-term tops form, because momentum has run its course and the market's turning down. And right now, if you look at all the monthly momentum, or all the gold indexes, they're way above their mid-Bollinger Bands, and everything's trending up right now.
Perfect. Tim, thank you so much for joining us. I look forward to this every time, and I know our listeners do too. Guys, if you want to check out more from Tim Ord, you got to go to the ord-oracle.com and check out our archives on TFNN. Tim, thank you so much, and we'll see you Tuesday.
All right, sounds good. Thank you.
Take care, everyone.